Hello and welcome to AI Market News by LM. Today, we're looking at a truly explosive moment in the global financial markets. The big question we all want an answer to, are we looking at a peak right now, or is this just the beginning of a massive new leg higher? We're seeing an absolutely historic post-holiday breakout in Japan, incredible momentum across US equities, and some huge macroeconomic shifts that are completely rewriting the narrative for the rest of the year. Let's dive right into this and see exactly what's driving these massive moves.
The sheer scale of what we just witnessed in Japan is absolutely staggering. After being closed for the Golden Week holidays, the Japanese markets reopened with a total roar. We're talking about a massive catch-up rally here. The Nikkei 225 surged to record a phenomenal closing level of 62,833. To put that into perspective, that is literally the largest single-day point gain in the index's entire history, a staggering jump of over 3,300 points. And as seen in the provided information, this wasn't just some broad, undefined rally. It was heavily propelled by domestic tech titans. Companies like SoftBank were aggressively bought up, basically catching up to the global AI boom that Japan kind of had to sit out while their markets were closed. It's a phenomenal display of pent-up demand finally being unleashed. To really understand this aggressive gap up, we have to look across the Pacific to our next focus. The US equities market is acting as a massive engine alongside shifting geopolitics. As seen in various news commentary over the past couple of days, the momentum we're seeing is just undeniable. Strong corporate earnings and shifting tailwinds have created this really powerful risk-on environment that the rest of the world is aggressively pricing in. We're actually seeing this US market engine in action right now. The S&P 500 hasn't just been climbing, it has completely shattered records. Closing at 7,365.12, the index jumped a highly impressive 1.46%. What's vital for us to recognize here is the breadth of this move. It's not just one or two companies dragging the market higher, right? We're seeing broad market strength across multiple sectors, reinforcing the idea that investors are broadly optimistic about the current economic landscape. So the crucial point is that while the broader market is strong, the tech sector remains the absolute powerhouse. The tech-heavy NASDAQ 100 surged past the 25,000 mark, closing at an astonishing 25,838.94. That is an explosive gain of over 2% in a single session, establishing its own brand new record high. When the NASDAQ moves with this kind of velocity, it sends a crystal clear signal to global investors that the appetite for growth and innovation remains incredibly robust. And just to complete the picture of this comprehensive market sweep, we have the Dow Jones Industrial Average climbing 1.24% to close just shy of the 50,000 psychological barrier, right at 49,910.59. When the S&P, the NASDAQ, and the Dow are all moving in lockstep to the upside like this, well, it confirms a powerful, unified market sentiment. We aren't just seeing isolated pockets of strength anymore, we are seeing a full-fledged equity rally. Now, if we want to unpack the why behind this aggressive tech rally, based on the prepared resources, the catalyst is undeniably tied to corporate earnings, specifically within the semiconductor space. Just look at AMD. The stock absolutely skyrocketed, jumping 18.6% in a single day. Why? Because the underlying business metrics are confirming exactly what the market has been hoping for: relentless, seemingly insatiable demand for AI and data center infrastructure. The market is actively rewarding companies that can prove they're effectively capitalizing on this AI revolution, and AMD's massive surge is the perfect reflection of that confidence. However, it's definitely not all just about microchips and data centers. There is a massive geopolitical component to this rally too. We've seen significant relief in the markets driven by hopes for an end to the conflict in the Middle East. The US has reportedly proposed a one-page memorandum of understanding to Iran, really aiming to bring an end to a war that has now dragged on for nearly 70 days. The immediate market reaction: global oil prices, specifically Brent crude, plunged. This is incredibly important for us to understand, because falling energy prices directly ease the broader global inflation fears that have been hanging over central banks and investors for months now. It's basically a perfect storm of positive catalysts. Okay, let's pivot to the macro pulse. Currency markets and sentiment are revealing the underlying currents driving global capital. We need to pay very close attention to what's happening here, because these shifts often dictate the next major moves in equities and bonds. Here we see a pretty stark divergence. If we look at the euro to US dollar pair, it's sitting at roughly 1.176. It's remained relatively stable, experiencing some slight upward movement as the dollar softens just a bit. But contrast that with the US dollar to Japanese yen pair. This is where the real action is.
We are hovering right around that crucial 156.00 level, and man, it has been incredibly volatile. The yen is fighting a massive battle against a strong US dollar, and we must keep a close eye on this specific currency pair since it directly impacts export-heavy indices like the Nikkei we discussed earlier.
There is intense speculation surrounding that 156 level for the yen. According to the input sources, there's widespread market chatter about suspected intervention by Japanese authorities. We're talking about an estimated 4.68 trillion yen potentially being deployed to defend the currency. It's a high-stakes tug of war. The Bank of Japan is trying to prevent the yen from entering a free fall against the dollar, and every time we see those sharp, sudden drops in the USD/JPY pair, the market immediately questions if the authorities just stepped in. It adds a massive layer of intrigue to the Asian trading sessions for sure.
All of these factors, the AI boom, the geopolitical relief, the currency battles, they're all feeding into the overall psychology of the market. And right now, as tracked by indicators like the CNN Fear and Greed Index, current market sentiment is aggressively dictating this intense momentum. We've moved firmly out of a defensive posture. Investors are willing to take on risk, they're chasing yield, and they're buying the dips. Understanding this psychological backdrop is absolutely key to understanding why the markets are so incredibly resilient right now.
So, how do we navigate from here? We bring it all home by looking forward to the economic calendar. The market has obviously priced in the current good news, so we turn to investing.com to pinpoint the specific macroeconomic indicators that have the potential to either validate this rally or spark a sudden pullback.
Let's look at the calendar and see how this builds our roadmap for the rest of the week. Thursday morning brings a cluster of critical U.S. data releases, all dropping at 05:30 a.m. U.S. Eastern Time. We should pay close attention to the initial jobless claims with a forecast of 205K, which is ticking up slightly from the previous 189K. We also have Q1 non-farm productivity expected at 0.7%, and Q1 unit labor costs forecast to cool down to 2.6% from 4.4%. These numbers are absolutely crucial. If the labor market shows signs of cooling without completely collapsing, and if labor costs are indeed coming down, well, it feeds perfectly into the soft landing narrative that equity bulls are currently celebrating. We will be watching these prints very, very closely.
This video is automatically generated by NotebookLM, an AI-powered tool. The reference sources used in this summary are listed in the video description. As this content is AI-generated, there may be errors in proper names, pronunciation, or unnatural speech. This video does not provide investment or trading advice. Please make investment decisions at your own discretion. With all these cross-currents colliding, the ultimate question remains: will Thursday's data confirm the soft landing, or are we staring at a massive bull trap? We'll find out soon enough. Thanks for watching. Don't forget to like and subscribe.